Nick, do you think the Fed can get inflation anywhere close to 2%? If they can't get inflation anywhere close to 2%, do you buy the long end in a way that we've seen the market sell it off over the last few days? How would you trade this? How would you position for this?
Look, I think it's more of a situation of textbook versus reality. You can't create inflation with words. And while I agree with Julia about the employment side of things, if you look just strictly at inflation, there's no proven link between central bank easing, increasing balance sheets, and inflation. Look what's happened over the last 10 plus years since the global financial crisis. Core inflation's been around 1.6%. We've never really touched that 2% band. So the likelihood of being able to do it now, particularly when unemployment's high and we're in the middle of a pandemic, and granted, this is going to be a longer term situation, but we are going to have more layoffs. We are going to have more cuts as a result of budget cuts, because the fact is the Fed is trying to provide a bridge throughout this pandemic to get us through it. Once we're through that point, hopefully the economy can be on strong footing, and hopefully we can be in a point where we can start hiring more. The issue that we have is that these aging demographics, these increasing in technological advances, only furthers the deflationary picture. So while you can argue that the long end certainly is attractive after a sell-off like yesterday, 1%, 1.5% doesn't really get us too excited. Our view from trading and looking at fixed income markets is what do we know and what do we have high conviction on? And those high convictions is on the front end of all central banks and all front end yield curves globally. Why? Because we know that central banks are not going to be raising rates between now and the foreseeable future. The bar to be hiking interest rates is so high and it's so far away that it makes sense to own the front end of yield curves where you can, where they're positives. Countries like the US, Canada, Australia, New Zealand, these are positive yielding yield curves in the front end. You can pick up some carry and you have a high information ratio. You don't have to worry about the volatility in the back end. You don't have to worry about a 2 to 5 to 10 basis point sell-off over the course of a month and worrying about losing any income that you're getting. Focus on the high information ratio trades, and to some degree, you can even lever those up. Sure, it involves a little bit more risk, but again, that conviction is there because I don't think you can find anybody that will agree that central banks are going to be hiking interest rates anytime soon.